In September of last year, the stock market decided Oracle was worth $933 billion. Last Friday, it decided Oracle was worth $331, about $600 billion of value, gone in 10 months. Now here's the part that should not be possible. The day this whole thing started, Oracle had just announced the best news in its history. Its order book had exploded. Its stock had its best day since 1992. And 10 months later, that very same number helped give Oracle its worst week since 2001. Nobody committed fraud. Nobody missed a quarter. The number everyone was celebrating is the number that broke it. Here is how that works. First, who this company actually is, because you have probably never bought anything from Oracle in your life. You have almost certainly used it today. For 40 years, Oracle sold the filing cabinets of the business world. The database, the place your hospital keeps your records, where your airline keeps its seats, where your employer keeps payroll. Unglamorous, enormously profitable, and almost completely invisible to normal people. Then the world stopped buying computers and started renting them by the hour, and Oracle was late. It spent years as the fourth name in a three-name race, and then artificial intelligence arrived. And it turned out that training these things needs exactly one resource in staggering quantities: computers. Specialized, expensive, power-hungry computers. Oracle decided that was its second chance. On the 10th of September 2025, Oracle told investors how many of those computers people had already agreed to rent. Now imagine a restaurant that has never served more than a few hundred dinners in a night. And one morning, it announces it has taken reservations worth $455 billion. Not eaten, not paid for, booked. Wall Street had been expecting something closer to $180 billion. Oracle's stock rose 36% that day. Its best day since 1992. $244 billion of value, added between breakfast and dinner. And it kept growing. By this June, the reservation book had reached $638 billion, more than 4 times bigger than a year before. $75 billion of that arrived with money up front, or with customers handing over their own chips. Some diners brought their own steak. That genuinely lowers the risk, it does not remove it. Here is the catch, and it took the market 10 months to work through it. A reservation is only worth something if you can actually cook the food. And Oracle has to build the kitchen first. Every one of those rented computers has to be bought, housed, powered, and cooled before a single dollar of that $638 billion becomes revenue. In the 12 months ending in May, Oracle spent $55.7 billion on building. The year before that, it spent $21.2 billion, nearly triple in 1 year. And now look at what that does to the order book. It is not a pile of money sitting there, waiting to be collected. It is a list of obligations waiting to be paid for, which means the bigger it gets, the more Oracle has to spend before it earns anything at all. So where does $55 billion a year come from? Mostly Oracle borrowed it. Think of it as the hole you have to dig before you can pour a foundation. At the end of May last year, Oracle owed about $87 billion. 12 months later, it owed $156.2 billion. The hole got about $69 billion deeper in a single year. Almost all of that is the slow kind of debt, not due for years. A small sliver is due inside 12 months. And one honest note here, Oracle's own announcement says it raised $43 billion in debt and $5 billion in equity last year. CNBC counted $39.2 billion of long-term debt and just under $5 billion of preferred stock. Those are two different ways of counting the same 12 months. Both are on your screen. We are using the companies. On the 10th of June this year, Oracle reported its results for the whole year, and they were records. Record order book. Record results driven by its cloud business. Record almost everything a headline writer normally cares about. The next morning, the stock fell 11%, because by then the market had stopped asking the question Oracle was answering. It was no longer asking, what did you earn? It had started asking, what did you promise? And what is it going to cost you to keep it? Read the second way. A record order book is not a trophy. It is a bill arriving in installments. And every single quarter that the order book grew, the thing Oracle had to build and borrow against grew right along with it. 11% in a day was not the worst of it. Over the 5 trading days ending on the 26th of June, Oracle fell 19%. To find a week that bad in Oracle's history, you have to go back to August 2001. The iPod had not been invented yet. And it kept sliding after that. The share price peaked at $345.72 in September 2025. Last Friday, it closed at $114.85. That is a drop of about 67%. Larry Ellison, who founded the company, is reported to be down roughly $213 billion over 10 months. Although that word "down" deserves some care. He never had $213 billion sitting in a bank. That figure was a multiplication. Shares he owns times a price other people agreed on that morning. The price changed. Nothing actually moved. Nothing was sold. There is one more thing about that $638 billion order book, and it might be the biggest fact in this entire story. Almost all of it is being built for one company, OpenAI, the people who make ChatGPT, which raises a fairly obvious question. How much of the $638 billion is theirs? And the honest answer is that Oracle has not said. Nobody outside those two companies knows. Not the analysts, not the reporters, not us. So we are not going to draw you a chart of a number that nobody has ever published. But you can see exactly why the market got nervous. A restaurant holding $638 billion of reservations is in a very different position depending on whether that is 1,000 different customers or one. So what would actually settle this? 4 things, and every one of them is a number Oracle itself has to publish. 1. Does the order book start turning into money? Watch whether revenue begins catching up to the promises. 2. Does the building keep nearly tripling, or does it level off? 3. Does the borrowing keep climbing? $156 billion was the figure at the end of May. And 4. Does Oracle ever say out loud how much of this rides on a single customer? Those are not trading signals. They are line items in a filing, and the next filing either answers them or it doesn't. Because here's the thing worth taking away from all of this. Every number Oracle reported went up. The order book went up. The building went up. The borrowing went up. The only thing that went down was what the market thought the whole arrangement was worth. That is not a contradiction. That is the market noticing that a promise to build is also a promise to pay. If you want the numbers behind the headlines, subscribe. Talk is cheap, numbers aren't.